The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 6th marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential, because living up to our potential is what we must master each and every day. So let's begin with an empowering belief or two. And it's a one word. It's called zeal. Zeal, folks, zeal is the inward fire of the soul that urges you onward toward your goal. Each time an opportunity comes your way that allows you to express your talent, maybe welcome that opportunity with open arms out there. Feel the stirrings of zeal and enthusiasm move within you when those opportunities present themselves. Zeal, folks, what a great world. It is a great world, and it's a great word out there. And zeal, that's the inner fire that stirs us into action. Zeal is the impulse to go forward and the urge behind all things. Now, here's a great incantation that you can use. It goes like this: good, better, best. Never let it rest till the good is better and the better best. Write that down. Good, better, best. Never let it rest till the good is better and the better best. What a great way to just start your morning. Maybe as you're doing some morning exercise or so, a little bit of stretching out there, ask yourself each day, what if? What if I injected more zeal, more enthusiasm into your work, or maybe into your communication with others in your family, your relationships? And maybe the question is, are you ready for that zeal test? I think you are. Put it in use today. Progress comes from asking one question, folks. What if? So begin your day by asking, what if, and then add that little special ingredient that we like to call zeal. Let's go check out the zeal in the marketplace out here right now. We've got the Dow down 17 points. We've got the S&P up 2, trading out at 1616. NASDAQ up about 4 points, out at 958. NASDAQ 100 up 7 points, up at 2952. New York Stock Exchange. Looks like the New York Stock Exchange out here is a flat market. We've got leading. Well, let's take a look at the commodities here. You've got gold is up $4, so very flat out there, $14.67. Silver is back a nickel, trading at $23.95. Light sweet crude now down 33 cents, trading out at $95.20. Looks like light sweet crude wants to make its way to $99, 99 or 100 to me. If we take a look at copper, it's back about almost 2 cents out here. Platinum's down 7 pennies. Our call-in number is 877-927-6648. Give us a call, folks. Would love to hear from you. We could take a look at your stock chart. Moving in the market here, you've got Google up $11. They are the leader in the clubhouse. Apple is just behind them, up $9.45. Trade at $4.59. Westlake Chemical Corp. WLK up about 5% this morning. They're up $4. Priceline is up 4. Goldman Sachs up 3.39. Atlas Air Worldwide, AAWW, up 8% this morning. Arkansas Best, they're the big percentage gainer out here, up about 31%, up $3 and change. VM up $3. Mobile Mini up $3. Pioneer Natural Resources up $2.90. That's up a couple percent. Humana Inc., HUM, is up $3.60. YRC Worldwide, we'll go check in on them. They're up 25% this morning, up $2.77. 3D Systems having another good morning, up $2.50. That's up 6%. That's to the upside. To the downside, we've got leading the charge, Regeneron Pharmaceuticals. That has been a rocket ship, so looks like just maybe a little bit of profit taking out there. Down $6 and change, off about 2.5%. Netflix off $5, down 2.25%. Amazon trading off about 1% right now, down 2.60. Amazon, maybe, they're talking about, I believe they're going to be voting on a national sales tax today, which, the question is, does that hurt companies like Amazon, or is Amazon so entrenched out there that it's so easy for shopping that people are going to say, hey, I'm going to pay the tax anyways, I might as well just sit and order it from my house and manage my time well. We'll go take a look at Amazon, see what kind of volume we're talking about here. You've got Lynn Energy down 265. IBM, that's putting some pressure here in the Dow. That's off $2, off about 1%. Berry Pete, BRY, they're off 4% this morning. Aetna, ATHN, off $2. Monster Beverage, MNST, up 3%. That's off $1.70. Let's start off by taking a look at the S&P 500. Right now, trading at 1639. What did it do on Friday? Well, it blew away the resistance area set by that April 11th area, that little four-candle, what I call the hurricane pattern out here. It took that level out. That high was 1597.35. That is now your new area of support out here inside the S&P 500. You've got two areas of support. That's going to be your 1597.35, the high of April 11th, and then you've got October 11th, 2007, 1579.06 on the daily chart. Those are going to be your areas of support. Of course, we know we've got support all the way back down here at the hammer candle, and that's at April 5th low now, 1539.50. So those are your three areas of support on your daily chart for the S&P 500. Where is the S&P 500 headed to? Well, if I pull this back on, pull the chart back out here, S&P 500 headed to about the 1650 level as its next stop. Doesn't necessarily mean it's going to do it today, but that is where it wants to travel all the way up to. Let's go take a look at the Dow, see what the top line equity or index here is doing. If we take a look at the Dow, you can take a look at this little rising price channel that it is traveling in. It also had a hammer candle, which was back on April the 19th. So that level of support inside the Dow Jones Industrials is going to be all the way down here at the low of 14,444 out there. That's your hammer candle. What did the Dow do? Well, the Dow itself took out as well that four-candle hurricane reversal pattern. You also had this little bearish engulfing out here, big bearish engulfing, I should say, from April the 15th. We had volume to the downside. That says that support is the high of April 11th, 14,887. Once you take out an area of resistance, that's when it becomes support. So that was resistance, 14,887. Right now you're trading at 14,966. If the Dow, right now it's the struggling index out here, although it's trying to make its way back here this morning. Take a look at what the Dow does as it hits 14,887.51. That's going to be your first level of support. The next level of support is likely going to be the rising price channel. We'll just have to see if the Dow pulls back as it approaches that area. And your third level on the daily chart is going to be your April 19th low out at 14,444, where the bulls were hanging out on that hammer candle. That's on the Dow. Let's go take a look at the Russell 2000. Let's see what that is doing. Russell 2000 also getting above its resistance level, doing that on Friday. So you've got all of the indexes out here above resistance. That resistance level was set up by this little evening star formation candle. Let me clear off a few things on the chart, make it a little bit easier maybe for you to see. In fact, I don't even know what that pattern is. I must have hit a key out there. That was the parabolic stuff. How about that? Hit a key. Now, let's take a look at the Russell. The Russell back here all the way in March 15th. March 15th, the high out there was 954. Even Steven. What happened on Friday? You close at 954.42. So closes up over an old resistance area. That resistance area identified by where the bears were hanging out. That resistance area was that Three River Evening Star Candle Formation. That was your first one that you had out here. That says the high of March 15th, 954, was an area of support. We had another Evening Star Reversal Candle Formation. That was set up by the three candles on March 27th, March the 28th, as well as April the 1st. The high on March 28th was 953.26. So setting up a fairly strong wall of resistance out here inside the Russell 2000. Of course, we know that the Russell 2000 showed some big weakness, wide price spread, accelerated volume on April 15th. Of course, you had this little shooting star candle that came in on April the 11th. So you can see the bears really trying to camp out and protect this territory out here, even as the Russell 2000 made its way and tried to retrace back here on April the 30th. On May Day, another bearish candle. You had that bear sash candle. Then what do we have on Friday? Or I should say, I guess on Thursday, on Friday. we have a gap up and a close above an old resistance level. What does that mean? That means now on the daily chart, old resistance now becomes support. So what is that? Just look at 954. You're traded at 958.22. That is going to be your first level of support. Where's the second level of support? Well, second level of support is going to be your gap up. Your gap up here from May 2nd. So the high, 940.72, or the low of Friday, which would be 946.94. Those are your first two levels of support on any type of pullback or retracement inside the Russell 2000, with the final level of support being all the way back down here, this little bull sash candle as well, which is on, so it's going to be your low here of April 19th, that number 899.46. That's on the Russell 2000. Let's go take a look at the NASDAQ 100, the NDX. Let's go see what that is doing. And this is really the key chart, I think, to be paying attention to. That is because we had the break of that 0.786 Gartley pattern. You know, we've been talking about that. That was a Gartley sell pattern. That Gartley sell pattern had formed and completed right around the 5th of March out here. Of course, when you gap up into a completed pattern, that's not your bearish sign that you're looking for. You don't like to see gaps up. Yes, gaps can be tested, but you really want to make sure you color in those gaps with the candle formation. It gives you the idea of the strength behind the trading session. We know that area was tested. There was a break below that level on April the 18th, and the bulls came right back inside, moved prices higher, went up and made that 100% move of a move. What is a 100% move of a move? That's a great question, and here's the answer. If you take a look at the swing point, let me pull this back a little bit further for you. We can see inside the NDX, you can see as the market moved up off of the June area, June lows, down in the 24.43 level, all the way up to a high that was put in on September the 21st out here. That September 21st level is where we saw a high and the market move lower. That becomes your swing point. So when we refer to a 100% move of a move, we're comparing it against swing points. It's a natural magnetic area if price is going to move up. You got this little island bottom reversal candle formation here inside the NDX. That went from December 21st all the way to when that formed on January 2nd out there. That was your first bullish sign. Your second real bullish sign out here was the gap up into that 0.786 Gartley sell pattern. Of course, the market had to really consume that for a while. It consumed it all the way until April the 10th when it went ahead and moved up with wide price spread. Makes that 100% move, and it does it completely, and it does that on April 30th out there. May Day was one of those other caution signs because as the markets were pulling back, you had the NDX that just simply wasn't budging. It was that little engine that wouldn't. Not little engine that could. It wouldn't budge to the downside. And what happens with a failed Gartley? It turns into a butterfly. The 1 to 1.272, that's going to take you into the range of about 29.82. Right now, the NDX trading at 29.53. Gets up above that level, then that says it wants to set its sights on 31.15. The NDX now finally getting up into a overbought territory. Last time that it was up in overbought territory happened to be the highs of September 21st, 2012. 877-927-6648. Dow's off 8 points. S&P's up 2. We'll be right back.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 4 points right now. S&P is up 3. And let's take a look at the New York Stock Exchange. So let's take a look at the larger breadth of the marketplace out here. And what we can see, this is a daily chart that we're going to start off with and take a look at. You see a number of different expansion patterns that are drawn in here. Let's just start from right to left out here, and that's what's really most important. We had a 3 drive to a top pattern out here. You've got that that in place right now on the U.S. dollar, Japanese yen daily chart out here. And this was really an ideal 3 drive to a top pattern. That first drive starting here on the high of April the 19th. That level was 9,004. Makes a retracement down into February 26th. Your second drive out here is the trading session of March 14th. The high, 91.28.99. Market pulls back, makes a 50% pullback into April the 5th, then makes another high, makes your third drive out here on April the 11th. If we take a look at time-wise, from our first drive to our second drive, you can see that really, it missed it by 2 trading sessions, so nothing really being forced there as well. So a nice symmetrical 3 drive to a top pattern. Those are important. The pullback here that we took a look at, looked like maybe it was going to be set up an A to B equals CD down. Looked like your first leg was off of that high from April the 11th all the way down to low put in here on April 18th, but no A to B equals CD down, no consolidation. Instead, what is a very bearish bearish pattern out here turns out to now be a strong sign of continuation to the upside, because that was taken out, and it was taken out with conviction. Maybe not conviction from a volume standpoint on Friday, but conviction from a candle standpoint as price moved above that level. You can also see here, here's your most recent prior to the 3 drive to a top pattern. We had a 1.618 butterfly pattern. That pattern really completed here, you can say, the session of January 30th, maybe the session of February 1st. The pullback there was very light as well. So another indication that when those should at least a 1.618 expansion pattern should at least pull back to the 0.382 level. If we come off of the November 16th low all the way to the high up there, never made it down, that would have been 95.23. It was never able to make it down to that level. So this is the weekly chart. If we take a look at a longer-term picture, let's take a look at the weekly chart out here. Here's the weekly chart for the New York Stock Exchange, showing the rising price channel, in this case coming off of the lows in March of 2009. We can see that price here, the last time that it came down to test this area was November 16th, 2012. Now what it's doing, it is up these horizontal lines that you're looking at on my screen. Those are the primary trading range boundary lines. In this case here, inside the NASDAQ, it's about the 93.50 area. You're trading 93.44. You get above that, it says it wants to take on the new trading range. If we take a look at retracements, and that's really what it does want to do out here. That doesn't mean that I don't believe we're going to have a sell in May cycle. It's just not going to start here just yet. And so longer term, intermediate term, again, we're looking at a weekly chart out here. What we can see is that the New York Stock Exchange is now well above the 0.786 retracement level. That would be 9,059. You're at 93.46 right now. So what does that say? That says that this wants to now go make a 100% move of a move. Where's that first level going to take you? Into the New York Stock Exchange. That's going to take you back to May 30th, 2008. That's going to be your 94.21 level, and then it's going to make its way all the way back to the 2007 highs, 10,387. Again, this is a weekly chart that we're looking at here. So over the course of the intermediate term, that in essence is where it wants to move to. That's on the New York Stock Exchange on the weekly chart. Let's go take a look. As long as we're taking a look at indexes out here, let's go take a look at the semiconductor index. Let's go take a look at the SOX and see what it is doing out here. Not the White Sox, not the Red Sox, the SOX industry out here, Philadelphia Semiconductor. And as we take a look at that, what we've got here today, it's taking out, this was a shooting star. There were a number of candles that maybe looked like shooting star candles on Friday, but some of them just simply had too large of a wick to the downside. In the case of the SOX, that was not the case at all. Had your classic shooting star candle out here, however, even though that is a bearish reversal sign, it was not what you were looking at or looking for in getting that type of sign. Why? Because you had this gap up. And you cannot forget about this gap out here. You gap up, that tells you you've got a strong trend. Certainly that is underway, and the session completed with this little shooting star. So yes, the bears tried to take some control, but if you will go ahead and you fill this in from the prior, at least from the prior candle's close, it would not have been a shooting star. So if you were trading on the mere fact that this was a shooting star candle, you need to be able to fill in your gaps. If there wasn't a gap here, then yes, it could have been a reversal sign out there. In this stage, I kind of ignore those one-day shooting stars where there's gaps inside them. 877-927-6648. We'll be right back.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up about 4 points right now. S&P up about the same. And let's finish off the taking a look at the SOX out here. We're looking at the weekly chart on the SOX. We had this little 4-candle evening star formation. That was back in March 30th of 2012. That level was taken out last week. The high there, 444.96. Last week's close, 453.71. So we're up above that area. That is going to be your area of support on the weekly chart. We'll be coming back into that high, which is 444.96. We take a look at what it is doing now. It's also up above the swing point here from May 6, 2011. I'll just put a black line across my screen. So it stopped at that level on Friday. You're now up above that. What does that say? That says that the SOX here wants to move all the way up into the 474 to 459 level. That's going to be your February 18, 2011 swing point out there. That is the weekly chart that we're looking at for the SOX. Let's see here. What else do I have inside the indexes that we have overlooked. Looks like I've pretty much covered everything. Let's go take a look at the ETFs out here, and then we'll go take a look at some of the individual stocks and see what it is that we have going on out there. If we take a look at the small caps, the IWM on Friday getting above the swing point from from March the 15th at 35 million shares on Friday, pushing in there with 52 million shares. It rejected on price, but pushing in with too much volume. Says at a minimum the high of Friday should be tested. That high is 95.47. So far intraday, you've been up to 95.39. So it's got a little bit higher to go here before you at least see that test. Volume-wise, so far today, in the first hour of trading, you're at 7 million shares, 7.5 million shares versus 52 million on Friday. But it's really also benchmarking really that 35 million share day from March the 15th out there. That's on your IWM. That is the weak link. It was pushing that March 15th. We saw that the Russell 2000 itself closed above the March 15th swing point. The IWM moving into that swing point with volume out there. And since that is the weak link, and that was pushing into a swing point with volume, that was a bullish sign, not a bearish sign, even though we saw a rejection of that area. We take a look at the Dow Diamonds. We get rid of a couple of things out here. Inside the diamonds, we see the diamonds gapping up over their swing point of April 11th. That had 7 million shares. It gapped up, and it did it on lighter volume. So we know we've got weakness here inside. The Dow does it with 5.9 million shares versus 6.9 million shares out there. The Dow Diamonds, give me a second here. Let me do one thing. The diamonds here, as far as the candle formation on Friday, again, it looks like a shooting star, smells like a shooting star, but really more of really just the rising window out here. You need to fill in that gap area. If you fill in just from the close of May 2nd, there's no way you would categorize that as a shooting star candle out there, and that's why I don't really use that even as a resistance. And it's questionable whether or not it actually qualifies as one. Let's assume that it does. When you start packing into it the open of the prior session, there's no way that really is a valid shooting star. So no way that is. Now, what the opportunity is out here for a couple of days, now this is what you really should be paying attention to, at least on these small caps here, well, and really probably the other indexes as well, would be the potential, if there is anything that creates a gap down, that would create some island reversal configurations here, and that would be the sign of the bears truly trying to take charge inside here. But until that time comes, what you have to be looking for, in my opinion, is more bullish outcomes versus bearish outcomes, because two of the weak links out here, the IWM and the diamonds, now this is regardless of volume. From the volume standpoint, volume is pushing to the downside. So when things do crack, things will move very quickly to the downside. We have seen that here over the course of the last couple of weeks. Nothing is going to change with regard to that matter, and we have seen volume off of the highs out here. That is not a bullish signal whatsoever. But we're taking things one step here at a time. So that was on the diamonds and the IWM. Let's look at the SPY out here. On the SPY, we have the SPY here trading out at 161.81. Let's go take a look at volume configurations here. The volume, the benchmark was traveling over to April 11th. April 11th swing point, that had 110 million shares, and on Friday, 144 million shares. So the SPYs take out a resistance area with volume out there. So that says, okay, you're bullish. You've got to be looking at bullish outcomes, not bearish outcomes right now. You can see just simply in the SPY's little rising price channel, I suspect that's where it wants to run up to out there. What's that price area? Probably in the 164-ish type range, 164, 165 out here. Again, what you need to be careful, we'll always be watching for out here while we've got this gap, at least over the course of the next couple of trading sessions. And I believe we're coming into Tuesday. I think tomorrow is Tuesday. And somebody's been keeping track. I think it's 15, 16 straight Tuesdays that are up out there. Why, I don't know. But you do want to be paying attention. Any type of gap down would create a pretty significant reversal signal, the island reversal. But that is not what we have in play at the moment. So we can see the SPYs taking out their most recent swing point and doing it with conviction, doing it with volume. Now let's take a look at the Qs here. We know the Qs want to form a butterfly pattern, whether it's 1.272 or 1.618. We don't know. The 1.272 is 73.10 to 73.04. Right now you're trading at 72.38. Well, getting above the swing point inside the Qs, 31 million shares we're going against. September the 19th, that had 36 million shares. Not enough volume there. How about on Friday? 34 million shares. Still not enough volume, but you've got enough conviction moving up into a D point here, and that's what I'm referring to as the completion point of your butterfly sell pattern. You're moving up into it with a gap up. That says that there is some strength there as well. But you can see here in each of these cases, you've got the potential, you've got the potential for that island reversal, and you pay attention to it. Rising window as well on Friday, not a reversal signal, not a shooting star type candle inside the diamond. So that takes care of all four of those ETFs. Let's go take a look at some of these stocks here, popping and dropping. How about let's go take a look at the leader in the clubhouse right now to the downside. Maybe that'll give us some type of information here. That is going to be REGN, Regeneron Pharmaceuticals. That has been a little bit of a rocket ship out here. So with that pulling back, that's pulling back here. Let's take a look at the volume. Just really trying to test the gap from Friday. 2.3 million shares, the upside on Friday. So far today, it's pulled back with 580,000 shares, so pretty decent volume out here. Where this should, what you'd love to see. You'd somehow love to see this come all the way back to where this last broke out, which was May 1st out here, right around 214.70. That is on Regeneron Pharmaceuticals. Don't know that it'll get back there, but that would be a nice buy point. Let's go out to Raleigh, North Carolina, to Bruce. Bruce, thanks for calling. Thanks for holding. How are you this morning?
I'm doing pretty good. Hope you're doing well.
I am. Thank you for asking. How was your weekend?
It was good. The reason I called is this Federal Express. I guess the last few weeks, I thought this thing was going to be going down maybe about 90 or, not like overnight, but over the next couple of months, and I see it jump back up the last few days. So I don't know if you think that this thing could get over 100 or maybe it's it could go up a couple more points and then pull back. I don't know. I'm kind of confused with this one.
Sure, no problem. Are you in this, looking to get in it? Are you short? Or just tell me what you want to accomplish, and then I'll see if I can.
Some August puts, some
okay.
I think it was August 90s.
Okay, all right, great.
About a month ago.
Absolutely. Okay, so if we take a look at Federal Express here, the first thing that we're going to pay attention to is that volume off of the highs here, which is March the 20th. So you have 12 million shares to the downside, additional conviction here on March the 21st as it moves down. Now, we can see on those days here, Bruce, as the market moves down, or Federal Express itself moves down, gets into that oversold condition. Just using our relative strength indicator here, works its way sideways for a period of sessions. In fact, all the way until about the 15th of April, when the market moves down. This continues its move down a bit lower. Does that here on April the 18th as it pushes lower. Also gets back into that oversold condition. And now all that it's really doing, it's really working that level off. But as we take a look at volume here, all the volume really to the downside. Now, your first bullish sign out here was this gap up. So when we take a look at coming off of the bottom here, as it was working off that oversold condition, you see how it gaps up between April 23rd to April 24th. And it does that with 3 million shares. Now, as it's pulling back here, and last session we're looking at is on May Day, it's pulling back with lighter volume, 2.4 million shares as it pulls back. And that's pulling back into a day that it had on April 18th, 5 million shares. So it's signaling to you that, okay, the selling pressure is over for the time period out here. And so that gap was very important for you to be watching and paying attention, not necessarily to change your position on the trade, since you're already out to August, but just in helping to help you to answer the question, hey, what is this doing here? Mm-hmm. That gap was important to be paying attention to. And then what was more important was, as it was pulling back, was it pulling back with lighter volume? Well, if you take a look at that next session, it did it with 2.3 million, 1.6 on the 26th, 1.8 million, 1.9 million. Again, that was moving up with 3 million. So it was a small sign of strength. And as it pulled back from a sell, I was telling you that the sellers were in essence didn't have the conviction as they did coming off of the highs here. Then what it also created was it created this little morning star reversal candle formation out here. So this was actually at the lows. This was the very first time on the daily chart, Bruce, which is the three candles of May 1st, May 2nd, and May 6th out here. And this is a bullish formation. So this bullish formation here is confirming the gap up that we just took a look at. And now this little junior swing point happens to be this April 24th session with 3 million shares. On Friday, it moved up with 2.3. So, okay, not a lot of conviction necessarily behind trying to take out that little B point, which would be the high of April 24th, 96.15. Today, you're up over it, and volume-wise, it's got volume this morning. So we're only done an hour and 15 minutes of trading, and it already has 1.2 million shares. So it's going to now form a small A to B equals CD up. That's starting with the low of April 18th. That level is 90.61 all the way up to that candle. Looks like a shooting star. Not enough of a move higher in order for that to qualify. But the April 24th high, 96.15, down to where it creates that little 3-candle session morning star. So 93.79 is your 1-to-1. It at least wants to get there. This could easily make its way back. And see, it's trading inside that March 21st candle, that downdraft, that second downdraft day of 9 million shares. It's telling you there's not a lot of buying conviction behind it on the larger picture here on the daily chart. But on the shorter daily chart, as we're paying attention to what is this doing each day, it says that it wants to probably get up and at least test that 98.99 level, which would be a 1 to 1.272 A to B equals CD. It may be that this equity even tries to get into the candle session of that downdraft from March 20th out there, even at that 102.50 level. But this is more on the shorter-term picture of a daily chart out here. You know, this in essence is really what's going on. It hasn't given you the signal that it wants to now, that it's formed a significant bottom out here. That I don't see inside the Federal Express chart, you know, that we're looking at right now. If you're also wondering, though, what it was doing as it was coming down to its lows, what you would also do is you would then continue going a little further left on the chart, Bruce. And if you take a look at the trading session here on October the 10th, when it gaps up, and it does with 9 million shares, if I just draw a line across my chart out here, the black line, you can see that as price was moving back into that area, I'm going to draw a black line across my chart as well on the volume bars on the bottom. You can see I'm not paying attention to the gap down because it wasn't really testing that bar on October 10th. When it was testing that bar on October 10th, we can see that's really where the support came in. See how it really stopped? You know, almost on that price. 90.93 was the number, and on April 18th it gets to 90.61 but closes back above it, and then does that on the following trading session as well. So that's what's really holding this in place out here, and it's going to need volume in order to push back down or push below 90s. It's going to need volume more than that 9 million shares, or the next time down into that 90-ish level, it will probably hold as a support area. So that's where the real fight between the bulls and the bears are. Is that making any more sense to you to help you to understand what the equity's doing?
Yeah, I think I'm learning from some of these lessons here. What I need to do is get in front of that option hour instead of buying these puts and just doing that kind of game. I need to stop doing that.
Yeah. We've got a great option hour for sure on Tuesdays from 12 to 1. And then the other thing I would do is when you're taking a look at any equity is just spend some time. The very first thing that would be helpful, in my opinion, is understanding where the battle might take place on a chart. And the easiest way, the first thing that you should always do is just go look at the high volume bars out there and just draw some horizontal lines across and take a look at, where is price trading at right now versus where are those bars, where are you in your position, and it will help to answer why an equity is pulling back to an area and finding support, as in the case here of Federal Express. And it'll just help you to also use that information, at least to be able to plan your trade on what the likely outcome would be. All right, Bruce?
That makes sense.
Absolutely. Hey, Bruce, thanks so much for calling. That was Bruce from Raleigh, North Carolina. We were taking a look at Federal Express. Ticker symbol is FDX. Right now, the Dow is off 10. S&P is up 2. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is off 20 points. S&P is flat here, up 96 cents. You got the composite up 8, Russell 2000. The leader in the clubhouse up 0.3%, up about $3 right now. We're going to go peek in on Darden Restaurant. That is the parent company of Red Lobster, Olive Garden, Longhorn Steakhouse, the Capitol Grill, Bahama Breeze, Seasons 52, Eddie V's Prime Seafood, and Wild Fish Seafood. That's all the brand names out there. You may not have known it. You probably have you've probably eaten at a Darden restaurant. But let's go see what the equity is doing here. Right now, it's traded at $53.10 as we take a look at the stock chart, just like we were talking with Bruce in Raleigh, North Carolina. The key is paying attention first to the high-volume bars out here. Well, the high-volume bar on the daily chart that's going to stick out to us is this downdraft. Big downdraft on December the 4th out here. Moves down with 10 million shares. This is a breakdown. Now, ideally, we like to buy breakouts, or you might want to consider selling breakdowns. And so it works the same way. You just flip the chart in essence. Now, what this is doing from a volume standpoint, there's a couple of different competing patterns that we have going on here. First, the area where it broke down, you've got this gap that it is already closed. And that is the gap from the breakdown of that December 3rd candle. I always like when something breaks down to go a little bit further back to the left-hand side of the chart, looking for either a swing point or a light volume area, and that takes you to November 29th. And November 29th is where this is headed to at least. That low is going to be 53.52 and the high is 54.19. 892,000 shares as it goes back in there. On Friday, this was moving up with 1.6 million shares. The prior session, 1.7 on April the 2nd. And so far today, 200,000 shares out here. So that's where it's headed to, and could be an area where you might take a look at if this is going to break down again. That would be an area where it would likely occur. Now, I don't know when they're out with earnings. That was December the 4th, so it's about March the 4th. So it doesn't look, and I'm assuming that was an earnings issue here when this gap down. It may have been something completely different. But let's just pay attention to the stock patterns. Now, coming off of the lows here when this was in the oversold territory back here on February 21st, created a little morning star candle. That's that 3-session candle right here. That was from February 20th. February 21st, and then that little move up here on February 22nd. That's set your support level. That's at where the bulls were going ahead and creating their defensive line out here, 44.11. Makes its first move up off that area, gets into a overbought condition on March the 28th. You get a little bit of a bearish candle, a little bearish engulfing candle right here. That's where the bears took control on April the 3rd. Goes ahead and makes a retracement. But if we take a look at that retracement here, what we'll see, it was only a 0.382 retracement. And volume on that retracement coming back was light. So that says the selling impetus like we saw out here coming off that December 4th area, not present at the present time. So the pullback only a 0.382 retracement, and now it has also crossed the B point. That is your April 3rd swing point high, $52 even Steven, 1.7 million, 1.69 million shares, and it was crossed with 1.75. In essence, you do have a confirmed A to B equals CD up. So this one's a little bit more difficult call because you've got two competing patterns out here. 56.16, that would be your 1-to-1 A to B equals CD inside Darden restaurants. It could easily do move up to the 58.30 level. That would take you back up to the area where it had gapped up on September 21st with volume. So if you're looking to short this, what you have to do is you have to wait for a reversal signal. And that reversal signal would come somewhere in the price range of 53.52, well, 54.19, anywhere down to maybe the high here of December 3rd, about $53.32. And you're already, that looks like you're pretty close to trading into that area. Folks, that's it for me. Stay tuned. Basil Chapman is up next. Then we go out to Larry Pesavento, Daryl Martin from 1 to 2, David White 2 to 3. Who's got a great piece of software, folks. The art of timing, the art of the chart. Go to the homepage of TFNN.com. Get all the details on that. Look forward to seeing you tomorrow morning. Take care, folks.